Hello everyone, welcome to another episode of Market Update featuring by Markets All and Rationale. This week I'm planning to talk about more on charts. I'll skip to the charts section very quickly after covering the economic calendar of this week. I would like to show you how I shape how's my outlook on FX market in general, where I'm more bearish, where I'm more bullish. Of course, starting from a dollar index chart. But before that, let's quickly dive into the economic calendar of this week. First of all, I would like to start with on Monday, we received Japanese a GDP number, which is, as you can see here, the actual number is higher than both forecast and the previous number. As you might recall that Bank of Japan is on the path of they're the only central bank on a hiking path compared to other developed countries, and seeing such growth numbers providing room for them to hike rates. As you might in general, their narrative is they have problem of creating inflation, creating growth. That's why these are a good sign. These are signaling that the Japanese economy's health is going well, and that's why there is a room to hike rates. So it supports the idea, which is bullish scenario for Japanese yen. On Tuesday, first of all, I would like to start with Fed member Waller's speech. In a recent speech, Fed Governor Waller mentioned that while inflation showed some positive signs in both November and December, January's data was disappointing, revealing that inflation progress remains uneven. He believes that a current monetary policy is still restricting economic activity and helping to reduce inflation. But he noted that if this slowing period in disinflation is temporary, which is a seasonal, it was a bit expected, by the way, because when you check previous years, you would see that on the beginning of the year, there's a seasonal impact on inflation, and it's coming high. That's why if the same situation applies for this year as well, further rate cuts could be considered for sure. However, until that's clearer, he prefers to keep rates steady for now. Apparently, in short, he's suggesting that we may see rate cuts if the data improves, if we see lower inflation rate in upcoming months. What do I mean by lower inflation? We need to see lower inflation in especially core services and super core inflation side. There hasn't been that much improvement on disinflation side in a shelters section. Apart from that, we saw that good inflation increased a little bit, and definitely it's undesirable issue for the disinflation path. Apart from that, we received Reserve Bank of Australia interest rate decision on Tuesday. As you can see, the previous rate was 4.35%, and we saw a 25 basis point rate cut. The rates were already elevated before this Tuesday's meeting due to high inflation concerns going on in Australia. But this was the first step after elevated rates for a while. And I had mentioned this Aussie and New Zealand currencies that the next step is expected to see rate cuts. That's why I'm more bearish on Aussie and New Zealand dollar currencies. But and we saw this Reserve Bank of Australia's rate decision. Apart from that, we received UK average earning index, which is a kind of average hourly earnings in US and average earning index in UK. It's similar. You might recall that if we see some increase in average hourly earnings, that means that might suggest wage price spiral, which is supporting factor for inflation. And here we see in the UK that forecast was 5.9 and it came 6%, and the previous number is 5.5. inflation concerns still like remaining in UK, and that's why like despite the fact that they cut rates in the like last meeting last week, it is expected to it's expected to see some like a more elevated rates around here. There probably UK will be would be following the other central banks. We're gonna see much more like elevated rates on UK side. I also had mentioned this on like a last week's video, and like I'll show you some trade ideas based on this mentality, and which is like a bullish scenario for pound. And on Wednesday we're gonna receive like an RBNZ interest rate decision. Here you can see, and it is expected to get like a 50 basis point rate cut at there. Same mentality with like Australian dollar, and 50 rate cut is expected, and that's also a bearish scenario for New Zealand dollar. Also, we're going to receive United Kingdom CPI number. Forecast as here is like a higher than the previous number, which is again concerning. As I mentioned, this is like a bullish. That's why I have a like bullish outlook on pound. We're going to receive meeting minutes of FOMC last week and Philadelphia Manufacturing Index. As long as we see like here you can see the previous number 44.3, and the forecast is like that much low. If we see such number, that will signal that economic activity is doing bad in US, which would accelerate rate cut expectations. So yeah, after like generally my base like showing all cases for like UK, Australia, and New Zealand. In summary, I would like to say that the outlook suggests that for the pound and Japanese yen, there's a bullish environment due to inflation, and due to inflation side on UK, and due to hiking path in like a Japanese yen. When you go to like EU or Canadian dollar or OC or New Zealand dollar, there's a bearish outlook. Seems strong to me. Because like in Canadian dollar there are a lot of factors like January inflation spike, that's a concern for them, okay, but there's like a huge uncertainty on Canadian economy, which is potential US tariffs. Okay, until now it is like a bit like a more like a threatening factor that is used by Trump's administration, but that still like offers some uncertainty. That with like uncertainty plus expected like oil supply increase, oil price is gonna come down. That's the expectation. That is like also affecting like a Canadian dollar. Those factors suggest like a bearish outlook for Canadian dollar. That's why I said like that. And on the EU side, due to growth concerns, Eurozone has been like up until now the like a front runner in rate cuts. So that's the general outlook in the FX market. So accordingly, I will be showing you some charts that are bullish on pound and like a Japanese yen, while shorting maybe EU, Canadian dollar, OC, or New Zealand dollar. But before skipping to charts, I would like to do an announcement. Markets All is running a free ebook campaign, and it's like a great opportunity to get expert like a market insights at no cost. It's all free. I highly recommend checking it out. The link to like their website is in the description. Go like grab your copy while it's available. As you can see here, for like an intermediate version ebooks and advanced version of ebooks are available on Markets All website. And now let me skip to chart section. As usual, we're gonna start with dollar index, and as you can see, this like after like a breakout from this rectangle chart pattern, it's pulling back. We're gonna see if this is like a fake breakout or not. We're following, but I still like this 40-week moving average and 10-week moving average, that like still as long as we see with this tariff become realistically threatening the economic activity around the world, we're gonna see this dollar index to increase, and vice versa scenario. And you can see here last week bar, last 2 weeks we started the week with like a increasing risk off sentiment and increasing dollar index, and after that, okay, like we saw that like the market relieved a bit with okay, like first tariffs are imposed, then okay, we're gonna postpone it for a month and something, and after that we saw this decline in dollar index and still consolidating around here. Dollar index seems neutral to bullish situation right now. And I'll start with pound franc chart. As you can see in the daily chart, there's a really nice rectangle chart pattern. Franc is highly tied with the gold, remember that. And if you believe that gold is like I still remain my bullish outlook on gold, but if you think that it's like the upside is a bit limited for the gold, you can consider to be to take franc as a short opportunity against what? Against either Japanese yen or pound. And pound technically also offers a great opportunity here. Potential breakout is coming here. If you're if you're subscriber of Rationale newsletter service, you're also you also get all these kind of trade ideas directly to your inbox. You can also find the link of Rationale below, in the descriptions part of this video. And if you I'm also alerting with trade alerts report when this breakout occurs or breakdown occurs in any kind of trade idea. So yeah, due to all considering maybe a franc's upside is limited and potential inflation concerns going on in the pound side, macroeconomic mindset, the bullish outlook is makes sense, and technically a game plan like this with a stop loss around here might be used. And pound New Zealand dollar, I'll go to the highest time frame in this one. Look at this. I think there's apparently some fundamental stuff is changing here. When you look at the monthly chart of pound New Zealand dollar, after this huge downtrend, let's say since 2007, there's a ascending triangle chart pattern formed after this downtrend as a bullish reversal, and after this a huge consolidation, a breakout month is December 2024, and pullback now is around here. After pullback, we might see a further upside on this parity, and I think this is for long-term investors, this is pretty a good opportunity. And when you come to daily, you can see that you can use this up this trend line to be long if you want to play a short game, not a long-term, short-term game. Yeah. And pound CAD, when you go to also in the weekly chart, as you can see, okay, this is I mean, it's not a perfectly rectangle, I know, but at least you can see that this 182 levels are acting as a resistance. For me, if I would like to prefer within this a pound CAD or a pound New Zealand dollar or pound franc, this is my least favorite because the uncertainty going on around Canada tariffs, oil price, they're huge factors, and they're so uncertain. That's why personally I wouldn't I wouldn't prefer to be in such trade, but I just wanted to show you this. And pound Aussie dollar, when you come to the weekly chart, as you can see, after an uptrend, an ascending triangle chart pattern formed here, a breakout, this fake breakout, and I'm still waiting for another breakout attempt from this ascending triangle chart pattern. If that's the case, you can be long around here with a stop like this, and this is a really good opportunity as well. Let's go to Japanese yen side. So in order to be long in Japanese yen, I need to short this chart, right? I had shown, I mean, I don't remember. This might be also one of the chart that is shared in rationale. Here you can see again fake breakdown, pulled back, consolidating here, and currently it's offering like a short opportunity. The only risk about this one, on Wednesday tomorrow, while I'm recording, I'm recording this video on Tuesday, so this like a potential like a short trade idea might fail in the case that New Zealand RBNZ does not cut rate as expected, like a not 50 basis point rate cut, or if they like remain more like a hawkish, that short opportunity might fail. That's why if you're like risk averse, like, or if you just maybe you can just give a shot like by risking a little portion of your portfolio. But just as a risk factor, I just want to remind that tomorrow there's going to be RBNZ meeting, and that would play a crucial role on this trade idea. But a potential breakdown from this rectangle after this fake one is a good opportunity as well. The price is already like below all moving averages. That's another advantage. Another one, OCN, same here, failed breakout, still waiting to be like to see like a convincing breakdown from here. But as you can see, I think like Japanese yen is lagging a bit compared to pound. Like pound trade ideas offering like they're more like at least actionable right now. But I think you need to prepare yourself to be long in Japanese yen at some point. That's why I just wanted to show you all these charts. And another one, Canadian dollar, Japanese yen, again with the same reasons, due to like an oil price, due to potential tariffs. You might run away from Canadian dollar, but I just want to show you this head and shoulder top chart pattern, a potential after like a huge uptrend, a potential bearish reversal, and I would be short in this one if I see a breakdown from here. And probably, since I'm like I don't want to be like a risk bearer on Canadian dollar, my stop would be tight on this, because if that's not going to work out, I would rather to be stopped out. That's my mentality in general. So franc yen here, symmetrical triangle chart pattern. This was one of the trade idea provided in rationale as well. I think I had provided this trade idea around here as far as I remember, and it already like worked out really well. Imagine you were short around with this close with a stop loss around here. You had already got like get like a 1.6 risk reward ratio, but it's okay. It's still like the price pulled back, and with this on 16 February bar, I think this short like the price decline will resume at some point. I think that's a good option as well. Apart from charts, I would like to show you Microsoft chart. In the long term, I'm still like I have like a bullish outlook after this like cup with handle still going, and to see such pullbacks to moving averages also in like a weekly chart is pretty normal. But I just wanted to show you this symmetrical triangle chart pattern. Remember that symmetrical triangle chart patterns might go both directions. Like it might act as like a bearish reversal after a uptrend, or it might act as a bullish continuation after an uptrend. So that's the case. But here it's broke down, and like we might see some more like selling activity on Microsoft, and I will be following this 385 levels. If that's the case, if that bearish momentum gains strength, I will be following, and maybe I can be long back around here. But if you would like to short Microsoft for a short term, I think it gives some it's an option. And Google chart here, not a proper one, but like if you take like this, at least like let me draw it like this. It's a base, right? After this base, handle formed, breakout failed, and when this fails, generally we expect to see some consolidation to be long again and we would like to see that consolidation occur around like a 20-day, sorry, a 200-day moving average or a 50-day moving average around there. It's the part that you would like to bet at least. You can just risk at some point. As you can see here, the price consolidating a bit. And when you look at the volume here, compared to this yellow line is the average 50-day moving average of like a volume, and it's below there. I will be like waiting to see more consolidation around here to be long again. But I mean, if you like if you don't draw this like a strictly this copy handle, this is also, you can also consider this as a formation of the handle part, right? Up handle might form, and you would like to, like, if you want to pyramid your position, you can be long here first, okay, with a stop here, and then waiting to see another breakout around it. But that's, I mean, when the price goes there, I'll be like showing you again this chart. And lastly, I would like to show you this semiconductor ETF. This is pretty important because like Nvidia, AMD, all like technology stocks, like semiconductor sector is highly important on S&P 500 index as well. As you can see, a rectangle chart pattern is like formed here, and after this consolidation, it's like attempting to like form this like a third touch to this resistance level. But before that, here price got rejected today while I'm recording this video from 200-day moving average, and that's why we might see some like a pullback. But I mean, to see such price action would not surprise me. That's what I'm trying to say. And I mean, yeah, again, if you want to pyramid, if you want to do like a pyramidic of your position, so a pullback opportunity might be used here, a stop, that would be your first position, and secondly, for this breakout, that's another option. And lastly, I would like to show you Magnificent 7 ETF, Microsoft, Tesla, Amazon, Google, Apple. And as you can see, after this cup with handle, you can see the base, up, handle, breakout, pullback. I mean, text chart, but like a textbook chart pattern, and huge move, and just like a pullback to moving average at consolidating around here. I'm waiting. I mean, I'm like more bullish side still here, considering all like Trump's pro stocks mindset plus like a rate cut path. But yeah, I would like to see some breakout around here. But as like just bear in your mind, if you want to monitor potential like a bearish scenario for stocks, when you come to this Magnificent 7 ETF, then you have to like monitor this potential breakout from here. So this is both directional, but if it breaks out, I'll be long in this one, or and vice versa if we see a breakdown here. Same here. And yeah, that's all I'm gonna talk about this week. Before closing the video, I would like to remind you this ebook campaign that like Market Soul running. It's a free ebook campaign. It's again, like I'm repeating, like it's a great opportunity to get expert market insights at no cost. It's all free, and I highly recommend checking it out. The link to Market Soul website is in the description. The link to Rationale website is in the description. Go grab your free ebook while it's available. I wish you a really good week. Have a good one. Bye.